Brookfield Asset Management's 2025 Q4 letter outlines company's record performance, its outlook for 2026, and the strategic foundations supporting long-term growth. It emphasizes durable earnings, disciplined capital deployment, operationally driven private equity, and a carefully planned leadership transition. The message is confidence rooted in structure, not cycle timing.
We delivered strong earnings in the fourth quarter, further accelerating the momentum that has been building throughout 2025 and into 2026. We finished the year with earnings, capital raising, deployment, and monetizations at all-time highs. We raised $35 billion in the quarter, our strongest fundraising quarter ever, bringing the total for the year to $112 billion across more than 50 different funds in the market. Demand was broad-based across strategies and geographies, underscoring the durability of our franchise. Combined with strong capital deployment of $13 billion in the quarter and $66 billion for the full year, our fee-bearing capital base grew to $603 billion, up 12% year-over-year. We generated a record $867 million of fee-related earnings and $767 million of distributable earnings in the fourth quarter. Full-year FRE reached $3 billion and $2.7 billion, reflecting strong growth across the platform, market environment, and 2026 outlook. As we start 2026, global economic conditions remain strong, supporting a broadly constructive investment environment. Stabilized interest rates, resilient economic growth, tight credit spreads, and improved global M&A activity are contributing to confidence across markets. Capital is increasingly gravitating toward real assets, where stable cash flows, inflation protection, and downside resilience are very attractive. Powerful structural megatrends continue to drive long-term investment demand. Digitalization is accelerating the need for data, connectivity, and AI infrastructure. Deglobalization is reshaping supply chains and increasing demand for localized, resilient industrial and logistics assets. Growing power demand is driving large-scale investment in power generation and energy transition solutions. With disciplined and patient capital deployment, our focus remains on investing in high-quality and critical assets that form the backbone of the global economy. We enter 2026 with strong fundraising momentum, launching new flagship private equity and infrastructure funds that we expect to be our largest vintages to date. Infrastructure growth is supported by the launch of our AI Infrastructure Fund, anchoring a $100 billion AI infrastructure program supported by NVIDIA and Kia. Private equity is also at an inflection point, supported by operations-oriented strategies and complementary funds across financial infrastructure, private wealth, and regional partnerships. Momentum continues across credit and private wealth, including the expansion of Brookfield Wealth Solutions, insurance platforms, and the acquisition of the remaining stake in Oaktree. With strong deal flow, broad funding sources, and constructive conditions, we are positioned for one of the strongest years in our history and announced a 15% dividend increase.
Brookfield is not betting on exuberance but on functionality. Stable rates and selective deal flow reward scale, patience, and underwriting discipline. Real assets regain relevance when inflation protection and cash flow matter again. The emphasis on pipelines and flagship launches shows confidence in demand durability. This is growth driven by structure and capital availability, not timing optimism.
Diversification and resiliency of BAM's cash flows. Over the past decade, we have expanded our platform to better serve clients by broadening strategies, asset classes, and geographies. This disciplined, long-term approach has allowed us to raise capital more consistently and deliver an earnings profile that is more predictable, more resilient, and better positioned to grow across economic cycles. Today, essentially all of our distributable earnings are fee-related, and more than 95% of fee-related revenues are generated from capital managed on a long-term or perpetual basis. This provides exceptional durability and visibility into future earnings and represents the lowest risk form of income in our industry. Our earnings strength is reinforced by diversification across asset classes, products, clients, and geographies. No single business contributes more than one-third of fee-related revenues, reducing reliance on any one segment and allowing different parts of the platform to perform across varying market conditions. We have expanded from 4 products in 2016 to nearly 60 strategies today, enabling steadier fundraising and capital alignment. Client diversification now includes more than 2,500 institutional clients, nearly 70,000 private wealth clients, large insurance platforms, and public affiliates across more than 50 countries.
This section explains why Brookfield compounds while others fluctuate. Fee-related, long-duration capital removes cyclicality from earnings. Diversification ensures something is always scaling, regardless of the environment. The platform behaves more like financial infrastructure than a traditional asset manager. Stability here is engineered, not incidental.
Private equity is evolving. Operators will lead the next chapter. Our private equity business is rooted in owning and operating industrial and essential service companies that form the backbone of the global economy. Returns are increasingly driven by margin expansion rather than multiple expansion, as higher funding costs and slower exits limit the effectiveness of financial engineering. Operational improvement has generated approximately half of the value created in our private equity investments. Chemelex illustrates this approach, a mission-critical industrial business with recurring cash flows that was underinvested by prior owners, creating an opportunity for operational transformation and value creation. Since acquiring Chemelex, we have built independent leadership, implemented pricing, procurement, and efficiency initiatives, and delivered over $20 million of EBITDA growth in 2025. Deglobalization and AI-driven productivity are reshaping industrial businesses, rewarding operators capable of executing change at scale. We launched the next vintage of our flagship private equity fund, supported by a 25-year track record and strong alignment with current market conditions. With operators defining the next chapter of private equity, our platform is positioned to lead this transition and drive long-term growth.
This is a clear statement that leverage-driven returns are finished. Brookfield's advantage is operational competence, not financial optics. In a higher-rate world, value comes from execution, not multiple expansion. Their model scales precisely when others slow down. This environment favors owners who can actually run businesses.
Management succession, a message from Bruce. As part of a long-planned transition, the board appointed Connor as CEO, with Bruce continuing as chair and CEO of Brookfield Corporation. This follows a 4-year succession process designed to prepare the next generation of leadership rooted in Brookfield's culture. Bruce remains fully invested and committed to supporting the company, while Connor leads the business forward with the backing of a deep senior management team. The transition emphasizes collaboration, discipline, and continuity as Brookfield enters its next phase of growth.
Succession is handled as risk control, not reinvention. Brookfield removes keyman dependency without disrupting culture or strategy. Long-duration capital demands stability above all else. Keeping Bruce involved preserves institutional memory while empowering new leadership. This is governance built for decades, not headlines.
Closing. We remain committed to investing in high-quality assets that deliver attractive returns with downside protection. Our primary objective is to increase cash flows on a per-share basis and return capital through dividends or share repurchases. We thank you for your continued interest and support.
This letter reinforces Brookfield's identity as a durable compounder. Stable earnings, disciplined deployment, and operational execution define the strategy. Diversification reduces volatility while expanding opportunity. Private equity adapts to a post-leverage era. Leadership continuity anchors confidence for long-term shareholders.